That time. It's that time for me to say Guten Morgen. Guten Morgen. Good day. Good morning. Hello. Good afternoon. Or all that stuff, you know. Um, Le Bitcoin. What did it do yesterday? Remember what I said in a recent video, I think? In fact, I think it was yesterday that I said it. Yep. And I said, beware the uh, beware the Bitcoin bull ruin. Right? Hey, buddy. Remember I said don't get caught in the traps, thinking, oh, you can over leverage this long now. Because some analyst said it's getting ready to go now. October, right? What have I been telling you about October? It's not done taking souls yet. The probabilities remain high, right? That we would see some some lower days or returns going down a little before any significant move to the upside. And you got all these analysts, oh, it's finally here. We've been waiting all this time, and all the analysts are saying it's go time. So it must be that we're just waiting for the engines to start. We're just waiting. Let's go. Leverage more longs. And what happened to those over leveraged longs yesterday? Oh, they got all those unrealized gains going to the upside. Power move. It's going up. Really? Going up, huh? What happened once it went up? Well, it kind of went sideways, and then it kind of started to drop a little, and now it fell down. Yeah, right. Basically, that's what happened, right? Is the returns went to the downside, and the price action followed. How many times do I have to tell you? That is what happens. Returns distribute from the means, and then returns do what? Yeah, they mean revert. Returns mean revert. Price action just follows. And by the way, price action follows not always. Most of the time, yes. The overwhelming majority of the time, yes. Almost all of the time, yes. But not all the time. This is why you need to be careful and know how to read the indicators. What indicators? The leading indicators that show you the leading information. I'm talking about volatility, entropy, probability, and statistics. Right? It's not if you use the VEPs correctly, it is zero surprise that the asset did what it did. Right? It is zero surprise that the asset went up, over, and down. Why? Because you knew it was going to do those things if you were reading the information beforehand. You could see it setting up for those moves. And if you look at low enough time frames, you could see it step by step. Right? It was very, very obvious that it was starting to pump when it did. And then when it was starting to go sideways, it was very obvious that was the asset telling you take your profits. Like, yeah, it had a chance when it had that first little leg up. Well, once it peaked out on the first leg up, when it peaked out on the leg up, I should say, it had a chance because there was a little bit of hidden bull forming on the short length REO, returns oscillator. And in fact, it did snap up and then snap right back down. But it didn't continue that. It lost out to the bear div that was forming on the returns oscillator as well as on the entropy oscillator. It lost out to the variance that was falling positively correlated. Quite simple. It lost out to the alpha volatility radar, which was indicating price go down. And it went down. on the next candle, and then bounced a little bit back up and started to go sideways, and eventually began to droop. And by the end of the day, it had drooped significantly enough that it had bottomed out to a very nice, precise level, by the way, if you look at where it went on the VRE chart, right? It went to a very, very specific area. And then what happened? Well, with the drop it had during the last 4 hours, it fell so precipitously that today's central daily range is quite wide. It's like 1.75% or something like that, 1.5%, whatever it is. It's significantly over 1%, still under 2, but still pretty wide. Now it's underneath the 2% threshold, so there's still a probability that it'll be a trending day. But these days, we find more and more that if it's not quite very tight under the 1%, if it's not under the 1%, it tends to be a little bit more rangy. Although, like I said, there's still that probability that it'll be a trending day because it is under 2% after all. And when the central daily range is under 2% of the asset value, that it typically means it's going to be a trending day. But things can go different. That's why it's very important to keep an eye. Are there likely to be trending moves on the day, on the 15-minute time frame? Yeah, absolutely. There's likely to be a trending move at some point in the day. It's a Tuesday, there was a bunch of activity yesterday, Monday. That doesn't mean it's going to be a huge day. Doesn't mean that the action is going to be nowhere as exciting as yesterday necessarily. Might be. We don't really care about that. Those are neither here nor there points of interest, right? What we're looking at is what is the actual direction likely to be based on the volatility and its correlation to the past price, or the entropy and its correlation, right, like to the A2.EPP, the alpha squared entropy power percentile, power percentile, one of those. Now, why do those correlations matter? Well, because those correlations give you the direction. That's why. All right, the volatility or the entropy tell you whether or not the asset has an expanding or contracting volatility or entropy. The entropy also tells you whether it's on a random walk or a trending move, right? And then the correlation tells you the actual probability of the direction. And that is kind of the key to the whole thing, right? Once you get that, once you see that that's what's likely to happen, then you know that that's not just what happened yesterday, as I said it would. It's what's likely to happen today and tomorrow and every day until this kind of information ceases to be leading information, which is kind of hard because it's leading information. Now, you can come along and say, well, you found other information that predicts stuff into the future too, right? And I can tell you that yes, at Alpha Trading, we happen to have done that. It happens to be remarkably accurate. And it's not just one candle away, right? It's well into the future. Yes, there are other models like our projection boss, and other people have probability distribution cones, if you will, or distribution bells, right? And they've just used those to sort of quote unquote forecast the likely distribution area that the price is likely to move through into the future. Sure, we have those. We have projection bosses that do that. And we have it on normal distribution, and we have it on Laplace distribution. Right? You can pick or choose whichever distribution model you prefer. They work great for both. And And you can use either or both of them on the same chart even. Right? And we have the RMLR, which is an indicator that we created. Right? Yes, the concept of the reverse mean of log returns that existed as a mathematical concept, but nobody had ever figured out until me and the other co-founders of Alpha Trading figured out through experimentation and testing and other things. Our math guy came up with his version of the RMLR for us to experiment on, which we did. And when we experimented on it, we found that you can actually use it along with something to determine the future direction of the RMLR, which is bloody amazing, right? It's a tool that lets you see the future direction of the reverse mean of log returns. Now, why is that interesting? Well, if you know that assets either distribute away from means, right? The returns distribute away from means, or they mean revert to the mean, and you know the reverse mean of log returns, then you know very well, using that tool, if you know how to read it, when the asset is distributing away from the return means, or when it is mean reverting to the returns means, right? And specifically the reverse mean of those log returns. And you say, well, if it's the reverse mean, how is that useful? Trust me. Don't trust me. Come and see for yourself. Come and look at our charts. See what we have created. Verify for yourself how bloody powerful it is to know when the asset is likely to distribute and is likely to mean revert. And see for yourself what that means in terms of targeting entries and exits, knowing where to take profits if an asset goes a certain way, right? And knowing well ahead of time what the general direction is going to likely be for the asset to complete a mean reversion, for example, right? Yes, the asset can always go up, down, or sideways. But when the asset is in mean reversion and you see the RMLR doing certain things into the future, and you see where the price is at currently, and you know to get to that line, either where it is at the moment or wherever it may be in the future, you realize, well, it can only do certain things that are probable in order to complete that. And so you can generally tell which direction it is probably going to go when you use the other indicators and the RMLR together. And you have an understanding. Okay, this asset needs to do this to complete that mean reversion. And it's very well within these probabilities, the 66 and 68.3 or the 95.5 or the 99.7, whatever it might be. So yes, we have tools that look into the future. And yes, they do work. Or we wouldn't use them. So now the question is, why don't you do that if you're a trader? I mean, I can't speak for you, right? Have you ever wondered to yourself what would happen if you had the power to see into the future, even a minute, let alone days, weeks, months, or years? What would you do with that kind of power? Right? And you knew that was accurate like the vast majority of the time. Right? What would you do? Would you use it correctly and wisely? Would you use it for good? Would you use it for self-interest? Nothing wrong with that necessarily. Whatever you do, you can come and get it at the Alpha Trading Discord at alphatradinghq.com/discord. And that's going to do for now. See you at the live stream. They start Monday through Friday, 9 a.m. Eastern Time. And until then, happy trading.